All right. Thanks for following along these last four videos. This is going to be the fifth video in the series and the final video in the stage analysis series, explaining Stan Weinstein's market cycle theory. If you enjoyed these videos, feel free to subscribe, like the videos, recommend to your friends, do all that. So, how to identify a stage 4 decline. So after volatility has contracted and price has broken below the 20-week moving average and the stage 3 support, the asset has now entered into a stage 4 decline, and the stage 4 decline is, this point within the stage 4 decline is the ideal selling point. Stage 4 is developed from increased supply, meaning that bears have taken the momentum. Look for a series of lower lows and lower highs, and sentiment will lean bearish during the initial stage 4. Media coverage will insist that this is a great time to buy, and the fundamentals are often still positive. Here is your fourth time looking at this chart. So here's our stage 3 that we just covered, and then the stage 4 begins after we get this break below the 20-week moving average. After we break below the stage 3 support, we will see an initial breakdown, possibly a pullback to that stage 3 support. This will turn it into the stage 4 resistance. And then during the stage 4, we'll see consistent lower lows and lower highs, all contained below the 20-week moving average. So supply and demand of a stage 4. Supply has overtaken demand once price moves below the stage 3 support, and supply will be aggressive. That supply can easily be seen as aggressive when you get those continual lower lows and lower highs. Bulls will not even be able to create a break in market structure. The bears will just absolutely own the entire price action. So the best performing stage 4 declines will feature breakaway gaps when transitioning from a stage 3 to stage 4. This is the exact same thing I said about stage 1 to stage 2, is the best performing ones will have breakaway gaps. In this case, here is IBM from 2002. Here's your breakaway gap transitioning from that big stage 3, and then you get this gap that puts you into a clear stage 4. The best performing stage 4 declines will have minimal demand zones below when looking at the last 2 years of price action. We'll come back to that in our real life examples. And then don't be shaken out by that pullback to stage 3 support. Like I said, you'll get that initial bulls trying to keep the stage 3 aligned, keep everything moving along, but they'll get hit with resistance, and then the bears will send it back down. Throwbacks to the moving average. So it's a common known fact that bear markets will experience sharp upside rallies before continuing lower. This is absolutely normal and completely rational behavior as long as the 20-week moving average stays above that price level. Price level should stay below the 20-week moving average during corrections within the stage 4 decline, within reason, and the 20-week moving average should act as resistance. And then finally, the slope of the moving average is the most important thing to watch. As long as the slope is negative, the asset is guilty until proven innocent. So here's our forecasting machine, the 20-week moving average. Throughout the stage 4 decline, the slope is continuing to gain downward momentum. We're getting more parallel with the y-axis. And then as the stage 4 decline kind of continues, we will see the slope of the moving average eventually become parallel with the x-axis, and that's how we'll kind of know that the stage 4 has ended and that the stage 1 is continuing. And then lifestyle of a stage 4 decline. So at the beginning, volatility has expanded after we came out of that contracted volatility from the stage 3, and price has broken below the 20-week moving average and the stage 3 support. And just as a stage 2 breakout, things may move slowly at the beginning of a stage 4 decline, so show patience. During the middle of the stage 4 decline, there should be a pattern of lower lows and lower highs, and these highs should stay below the 20-week moving average. Additionally, bases may form that are good risk-reward opportunities to add to your short position, and then towards the end, volatility is too high. Large price swings will make it difficult not to be stopped out of your position. And everyone in the world has often forgotten about this asset. It's been in this brutal stage 4 decline. Price is irrationally low, and you'll see the stage 4 decline begin to end when the smart money steps in and begins buying. So let's go look at our charts. First up is Nike from earlier in this year. So we get this stage 3 developing here, and then we'll kind of get, you could say a breakaway gap here. This one kind of got a little bit loose with the support, but you get this break below the 20-week moving average, you get a break below the support, you get your breakaway gap, and then this whole time price has been contained below the 20-week moving average. The slope of the 20-week moving average is firmly down. This is definitely a stage 4 decline in Nike. Next up, we have Goldman Sachs. Same thing. This is Goldman from earlier in the year. We form our stage 3 top here around this 428 level, and then we see that this support cannot be held. We get this breakaway gap down. We get our typical pullback back to stage 3 support. Now it turns stage 4 to resistance. And this one cannot be more picture perfect as it moves down into stage 4 decline. Slope is firmly down. Price is getting rejected. We're making a pattern of lower highs and lower lows. There's not even a low that's formed yet. This one's straight down. Textbook stage 4 decline. Next up, we have the 3M company, again from earlier in this year. We'll say this is our stage 3 support here. Here's our stage 3 resistance up top. Moving average starts to go sideways, then it starts to go down, and it continues to go down. And this is one of those bases that I was talking about. This is a good one to kind of watch. We'll say that support kind of held around this area. It gets a little loose in here, but then it just goes straight through support, and then this would have been a good time to add to your short position, possibly around either this 173 or this 169 level. Clear stage 3 decline or stage 4 decline, and even after one leg down, here's your second leg down. This is a second base that you could have bought going into our third leg down right here. Next up is Cisco from the tech bubble. So we put in a top right around, let's say, March of 2000, and then we oscillated back and forth through our stage 3. Finally, we break below here, and that is further propelled downward by the negative sloping moving average, and this stage 4 decline goes on for a while, from December of 2000 until September of 01. We just see downward price movement. And then finally, we have Ethereum. So with Ethereum being in the stage 4 right now, I thought I'd bring up Ethereum from 2018 to 2019. So here's your stage 2 top. Here's your stage 3 support. We never get back up to that stage 2 top because it was so high up. Price just gets bodied at the sideways sloping moving average. And then we continue down lower and lower and lower until eventually we get our stage 1 to form here. So thanks everybody for watching this series. Really appreciate it. If you have any questions, reach out to me, and I'll see you in future videos.